Hello, today we are going to solve question October 2024 paper, question number 1, part B. Prepare the statement of financial position of 30th September 2024 for Towne Car Parks. Okay, so let's start preparing this. For your first step is going to be when you start writing all the things here and put a tick, okay, so that you have incorporated everything, and then it's better to write off others. So the first one is the premises and the equipment. Okay, let's write for this. So the cost is going to be equal to, okay, the cost is 600,000. So let's write here 600,000, then 100,000. Okay, so 100,000 and 200, 120,000. So let's write all of them here. So 100,000 and 120,000. These are the costs. Now accumulated depreciation, okay, which includes this year's depreciation. You can add up from the previous one which we have calculated. So 400,000 plus 15,000, it will be 415,000. So it is going to be equal to 415,000. Then 100,000. Okay, the next one is here it is 65,000 plus 20,000, it is going to be 85,000. Then you have office office fixtures, office computer and fixtures. So the accumulated expenses depreciation was 14,800 plus 13,000. So it will be equal to 27. So the accumulated provision was 55,000 plus 13,000, that is um, 68,000. So that is the provision. So 55,000 plus 13,000, that is equal to 68,000. Now let's calculate the carrying value, which is the difference between the cost and the accumulated depreciation. So this is 600 minus 415,000. So the carrying value is going to be equal to 185,000. Next 100,000 minus 85,000, that is equal to 15,000. Then 120,000 minus 68,000, that is equal to 52,000. Now let's add up all the values. So 600 plus 100, 700, 700 plus 800, 820. So let's add up this 820,000. Then let's add up these values. So 415 plus 85 plus 68, it is 568,000. So 568,000. Then you have 185 plus 15 plus 52. Okay, so that value is going to be equal to 252,000. Okay, the next one is the current assets. So current assets, we have the first one is the trade receivables. So the trade receivables were at 38,100. So let's write that 38,100. Now less allowance for irrecoverable debt. Here we have adjusted, it is 400. So it is going to become equal to 400, that is equal to 2,100. So here we have to write less allowance for irrecoverable debt, which is at 2,100. So the difference between these two will be equal to 38,100 plus 2,000 minus 2,100. That's going to be equal to 36,000. 36,000. Then other receivables. Okay, so the commission let's see what are the other receivables. Now the commission receivable, okay, the commission receivable had become 200 owed, okay, to 300 commission. No, let's see the other receivables. So the rates had got prepaid, so that is 800. So let's write, okay, 800 is prepaid. Now commission receivable is an income. Income owed becomes an asset. Okay. So income owed will become an asset. That's why you are going to write 300 here. Okay. This is nothing but income owed. Okay. Will become asset, current asset. Okay. It is going to become current asset. Now the cash and the bank, they were at 7980. So 7980. Now let's add up all this values. So that is going to be equal to, so 36,000, the 36,000 plus 300 plus 800 plus 7980. That value is 45080. So 45080. Now we can see that, okay, now we can see that 252. So let's add the total assets. It's going to be equal to non-current assets plus current assets. 252,000 plus 45080. It's going to be equal to 29297,080. So this is the value of total current assets. Okay. Now let's calculate the capital and liabilities. Capital was around 170,000. So let's write that. Okay, 170,000. Then profit for the year we had already calculated. It was 71,730. So 71,730. So 71,730. Now let's this so this value is going to be equal to 241,730. Okay, the total, you add up these two, so you will get 241,730. Now let's do the less drawings. The drawings were at 30,000, so we have to subtract the drawings from this total capital and profit. So it is equal to 30,000. So 241,730 minus 30,000, it is going to be equal to 211,730. 211,730. Now let's calculate the non-current liabilities, the 7% bank loan. Okay, so 7% bank loan is going to be equal to 50,000. So it is equal to 50,000. Okay. Then we have the trade payables. Trade payables was 29,600. Okay, so trade payables was 29,600. Then plus other payables are interest, bank loan interest. Okay, here it was supposed to be 2,700 plus, okay, 2,700 plus 700 more, that was equal to 3,500. Okay, so this owed expense will become a liability, current liability. So that's why bank loan interest is going to be 700 owed expense. Okay, owed expense is going to be liability. This represents bank bank loan interest. Then we have the electricity. Okay, electricity was an expense and it had got accrued. Owed expense again is a liability to the business, so current liability 1050. Then we have provisions. Okay, this provision 4000. Okay, the provision 4000 made by a legal claim from the personal damages 4000. So that also has to be included here. So this also can become current liability. So that is equal to, when you add up all of this, it's going to be 35,350. Okay, so let's add all of this, 35,350. Now let's add 211,730 plus 50,000 and 35,350. So that value is going to be equal to 297,080. 297,080. So if you see, that's the same value as the total assets. Okay, so why are we including the provisions here? So usually any carrying value of that provision has to be included even then in this. So usually we say that cost minus the accumulated depreciation, which represents the current carrying value, is a asset. But here this provision, okay, this provision you are going to make for the legal claim for personal damages is going to be a current liability which needs to be paid immediately. Okay, it needs to be paid immediately. So this also becomes a current liability and we have to represent it here as a liability. Okay, so and finally we can see that the total assets becomes equal to total liability.